Hello everyone, welcome to my channel. Don't forget to like, comment, and subscribe. Insurtech investment broke records in 2021. Gallagher Re. Global investment in Insurtech reached $15.8 billion in 2021, according to Gallagher Re's Global Insurtech report. The figure said Gallagher Re was the highest on record and more than 2019 and 2020 combined. The firm said that over the course of 2021, some $9.4 billion was invested into property and casualty insurtech, with a balance of $6.4 billion or about 40.5% of the total, following a huge uptick in quarter four, directed into life and health companies. The rise in total funding in the final quarter of last year was driven by 13 mega round deals. They accounted for 71% of the $5.3 billion invested during that period. Alongside this, 2021 quarter 4 was also until the most recent first quarter of 2022. The largest ever for seed, angel, and series of funding rounds, which totaled $635 million. Dr. Andrew Johnston, global head of Insurtech at Gallagher Re said, an incredible upward trajectory of global Insurtech funding has occurred during the past 9 years, after we started tracking it in 2012. Culminating in the record-breaking $15.8 billion total for 2021. By the end of 2021, an enormous $41.65 billion had been invested globally into Insurtech across 2,249 deals in 63 countries. It includes 99 mega round deals, which accounted for $21.88 billion of the total. Therefore, more than half of all the investment deployed during this period went into only 4.4% of all Insurtech deals. He added, Insurtech investment growth over the past decade has been incredibly impressive, and there's no slowing down for the time being, with the first quarter of 2022 recording $2.2 billion worldwide, while only 43% of the total global investment recorded when compared with the prior quarter in 2022. Quarter 1 saw parity between quarters in terms of total deal flow, deal count, with a very impressive 143 deals recorded. Gallagher Re's latest report opened with a snapshot of the region's Insurtech landscape. It notes that at year-end 2021, the United States had seen more Insurtech investment both in terms of cash and deal count than the next 60 countries combined. Up until the end of 2021, the region had hosted 54.62% of all deals completed, rising to $27.2 billion through 1,237 rounds, of which $26.5 billion was raised by U.S. companies. The report also focused on the most recent quarterly investment statistic for the region. The April report also includes case studies of the Insurtech Road, a full-stack risk-bearing personal lines insurance company, Mexico's Zenda IA, a digital health insurance MGA in partnership with Swiss Re and Juris and Foxquilt, which develops, underwriters, and distributes its own commercial insurance products in the US and Canada with the backing of Munich Re. The report's deal of the quarter explores the transaction that made Latin America's first unicorn, Butterfly, The digital health Insurtech automatically track individuals' good habits and reward them with no-cost the life insurance coverage. Thanks for watching. See you in the next video and bye-bye. Hello everyone, welcome to my channel. Don't forget to like, comment, and subscribe. On matching risk with capital in insurance, digitization and automation of insurance. Digitization within insurance businesses is hardly a new concept, yet there are a number of reasons why big money internal initiatives have not lived up to expectation. The first is priorities are not aligned across the businesses. Number 2, initiatives don't match market direction. Number 3, lot of money means a lot of stakeholders. Number 4, players must relinquish traditional roles. Technology is breaking down some of these barriers already. It is also enabling new players to insert themselves in the value chain and provide customers with faster, more convenient products or services. Still, this is just the tip of the iceberg. Technology that is already available can make existing market participants much more competitive beyond layering a great customer experience over an existing product. For example, number 1, running algorithms across the underwriting portfolio to hedge risks automatically. Number 2, using real-time analytics to identify how portfolio changes with every new risk. Number 3, monitoring risk tolerance, portfolio diversification, and pricing at scale. Data federation, not data standardization. Technology also has the potential to transform the way the industry itself operates. Take the placement of risk capital. A major insurer might have £500 million worth of reinsurance every year. That £500 million might then be placed across 40 until 60 different counterparties. Each of these counterparties might buy in at different levels of risk and return. These steps are typically manual and rely on brokers who go out and poll the market for pricing, all of which add time and cost to the process. A more efficient way of matching risk with capital would be through an auction process that reduces the steps and automates the process. Reinsurers could simply express their interest and the software would do the rest. If everyone understood how it worked and had access, then reinsurance capital payments could be concluded in milliseconds. To achieve this kind of market efficiency, we have to answer the questions of how to centralize the information. Data standardization is one approach, but forcing everyone to invest in standardizing data system simply doesn't work and is unlikely to result in agreement on one industry standard. Data federation enables centralization without standardization. Individual market players don't need to reconfigure everything and acquire the same internal data system as everyone else. They just need to be able to make information accessible externally in a format that is recognized by the federal platform. The software is available, the platforms are available, it just needs a groundwell of industry commitment. Unbundling the insurance value chain, technology might have an even bigger impact if market participants focused more on value for customers, value from capital, and value to shareholders. Today's technologies can already perform underwriting, claims, and capital management tasks faster and more effectively. Inevitably, this will lead to the unbundling of the industry. While this might seem like a fundamental challenge to large insurers and the traditional brokers, It also represents an opportunity for forward-thinking market participants to differentiate through the way they add value. Insurer may decide to focus on consumer part of the value chain by becoming pure players in underwriting without having to worry about capital or even claims. Reinsurers that have more funds from their third-party investors than from shareholders may decide to focus on writing risk for others. Thanks for watching, see you in the next video and bye-bye!